We'll talk about the third quarter first, and as I've been able to say for the last several quarters, it's record. We just hit a record for revenues, for revenue yields, for operating income, customer deposits, bookings 2 years out. So right up and down our business, it's records and strong demand. So we ended the third quarter up about 8.7% in our yields year over year, which was strong. And at the same time, we held our costs flat, which was also good to note, and that resulted in, like I said, a record quarter. And as we were able to adjust our full year guidance, we did that for the third time this year, and it's going to take us up to about $6 billion of EBITDA, which again, to use a broken record word, it's a record. And so we're expecting much more as we get into the fourth quarter and then beyond.
You know, Jay Powell, Fed Chair, obviously, that you just listened to. I am curious, Josh, if in terms of macro, what matters in terms of Fed policy for you and what's going on in terms of the interest rate environment? He did also talk about the savings rate, suggesting consumers can continue spending, which we want to get into too, in terms of, it seems like consumers are certainly still spending on cruises. But give us macro, give us consumer spending, how you would describe it all.
Well, for us, the word's going to be robust. We've been living through this cycle with everybody else. We've lived through the high inflation, we lived in the high interest rate environment, and now we see inflation down. We see the Fed taking action to start reducing that interest rate environment. And through all of it, what we've been seeing is robust demand. And because of our business, first of all, it's a global business, as you know. We have a portfolio of brands that are really world-class all over the world. And what we see is strong demand, no matter how you slice it, whether it's geographic, whether it's contemporary versus more premium. We're seeing that strength, and we see it in the results. We see it in the onboard spending levels. As part of our third quarter results, it's not just about the ticket revenue, which was taken anywhere from 6 months to up to 2 years in advance, but what's the actual onboard spending environment, which is much more real time. And the fact is, our onboard spending for this past quarter was up over 6% year over year. And that's actually an acceleration, because in the second quarter, it was up closer to 4% year over year. So what we're seeing is consumers that are healthy, that still want to spend on experiences. And as you've probably heard me say before, we are an unparalleled value, right? We are a better value to land. I remember being in the offices with you in December talking about my hotel stay. Not only are we unparalleled in the value, we are unparalleled in the experience that we give to people. You get value for what you pay for, and we deliver on that guest experience like nobody else.
So Josh, are you seeing any weakness across any part of the portfolio of brands right now from any segment of the consumer?
No, we're really not.
No pullback whatsoever?
No, as a matter of fact, if you look at our 2025 booked position, it's higher in price and occupancy than it's ever been at the same point in time. When you look at 2025, we're higher in every single quarter on price and occupancy. So things are continuing to move in the right direction. And I think cruise is tiny. Right? At the end of the day, we're the biggest cruise company in the world, but if you take the whole cruise industry, it's only about 2% of the overall vacation market. So we are a very tiny segment in a huge market with a lot of room to grow, because we're getting the word out. We are being more effective in communicating the value and communicating the experience. I'm really differentiating our brands so that they get a cut through and it means something to people, and that's paying dividends.